Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. The price of crude oil is settling down around $1.50 and trading here today. That's a decline of minus 1.91%. But for the week, the price is up over 2%. So let's take a look at some of the technicals that drove both the move higher and the corrective move lower today as we close the week and head to the new trading week. First off, looking at the daily chart of crude oil, as you can see, the price action has been more to the upside over the last month or so of trading. And in trading this week, the price moved above the 100-day moving average. That's the blue line in this chart earlier this week. The level comes in at $73.68. And the move to the upside had the 200-day moving average. That's a green line in this chart as its topside target. Going back in time, looking at this high right here, the last high and the last test of the 200-day moving average found willing sellers against that level, pushing the price to the downside from there. And in trading this week, it looks very similar to that high. Price came up to the 200-day moving average, and we are seeing a modest rebound or move to the downside in trading here on Friday. And we'll see. And going into next week, we'll see if that momentum can continue to the downside. And like back here, what we'll do is look for the 100-hour moving average. The 100-hour moving average stalled the fall through here before breaking below the level and then finding resistance right there. You can see it better if I get my arrows out of the way, but right here. And so in trading next week, we're going to be watching to see if that momentum can take the price down toward the 100-hour moving average and see what happens there. Doesn't necessarily mean that what happened here is going to happen here, but that certainly is the technical level that we need to get to and through in order to increase the bearish bias in the price of the crude oil. It could easily find support right here as well, which is the high price that we saw on June 6th, and that's where where the price found support in trading here today. There's also another reason why the price of crude oil found support where it did. And if you go to the hourly chart, you can look at the blue line in the chart. This blue line represents its 100-hour moving average, and lo and behold, the price came down to that moving average and currently down testing it as we speak at the 0.7523 level. If the price were to move below that moving average, we'd look for further momentum like we did here, but then look for a break ultimately of the 200-hour moving average. That's a green line in this chart. If we're able to get below that level, that opens up the door for further downside. We couldn't do it here. We'll see if we can do that, but we still need to break below the 100-hour moving average first in order to tilt the bias more to the downside in the price of the crude oil. And if we do get below that level, once again, we'll be looking down toward the 100-day moving average at the 0.7368 level. So there you have it, a look at the crude oil as we head into the weekend and head into the new trading week. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.